Good day, traders. Adrian Jones here, CEO at Tradeology. Thanks for joining me today. This is another in my series of weekly forecasts, my Monday forecast for the week for your trading. And I'm going to include some Forex analysis, a bit of gold, a bit of cryptocurrency. We're going to see where things are headed for the week. And so let's get started. And firstly, what I'd like to do is just share with you the economic calendar for the week ahead. So let's have a look at that now. There we go. And I'm using this site, as I frequently mention. You can use many other particular sites. I'm not affiliated to them. And what I've done here is I've filtered out the news for the coming week, just for the high impact news. And as at today, we're on Monday. We are expecting a few announcements that would affect the Australian dollar, RBA rate statement, and some news coming out of New Zealand tomorrow, Tuesday. Nothing on Wednesday. And then a slew of information on Thursday that will affect the pound. And we can see that that is all set out here. And again, the Aussie. And on Friday, Canadian dollar, some employment figures coming out there, as well as speech by the Bank of England Governor, Bailey. And then we have the non-farm payrolls coming out of America later in the week. Now, of course, there is other news that's on this calendar, but I've just filtered out the high impact news for the week. Now, with the RBA, they're expecting perhaps no change or an increase in the interest rate. So we're not too sure just yet. So we're going to wait and see. And overall, though, I do expect that we're going to see some positive signs there for the Aussie, some strengthening over the course of the next couple of days after that announcement. And further on, we've got a lot of information, as I mentioned, coming out on Thursday. To keep an eye out on that around these times. And for the most part, I think the market has factored in already. We are expecting certain of the information is already out there. So I don't think there's going to be any great shakes as far as that's concerned with the unemployment change. Current predictions are from America that perhaps about 20,000 new jobs have been added. Of course, that could come out lower or higher. It's a bit early to say just yet. But the main thing is that during the times of these news events coming out, I always recommend that you stay out of the markets at least half an hour before and half an hour after, as pairs can be volatile and don't necessarily go in the direction in which you would expect. So we're going to stay out of the markets half an hour before and half an hour after. Now, other than this news, there is, of course, a lot else happening in the world that, from a fundamental point of view, that can be attributed to influencing the movements on the markets. And just last week, if you've been following the news at all, you would have seen that there was quite a fracas on the stock markets with one of the forums on Reddit doing a run on a company called GameStop. And what happened there is that a lot of hedge funds had bet short in the options market on the stock, GME as it's known in the stock market. And this group, this community, a rather large community, decided that they would go long on the stock. And what happened is that they basically caused the stock to rally over 1,000%, and the price of the underlying stock rose from about $19 to about $470, and eventually trade was suspended on the stock on Friday on some well-known platforms like Robinhood, etc. And this caused a huge loss for a lot of hedge funds. And basically a lot of uncertainty in the stock market, with talk of stocks generally being overvalued and the potential bubble going to burst anytime soon. So that caused a bit of waves and, of course, a lot of interest from retail traders, especially because these guys were retail traders. And it just goes to show that retail traders like you and I, although we're dealing mainly with Forex here, are playing an increasingly valuable part in the markets. And what happened is actually that this has influenced slightly the US dollar on Friday as things became a bit more risky, right? So people go into the dollar and there's more risk, and that settled a little bit. But going into the week, that is something that's on a lot of hedge funds' minds. And what's actually happened is a lot of them have decided not to invest in any big investments just yet. They're kind of waiting for things to slow down a bit and get some guidance for themselves. But expect this trend to continue, I think. Within the stock market, within the options market, retail traders are coming to the fore. Now, other news still happening on an ongoing basis, which you might be aware of, is that there's an effort to get the vaccines rolled out in America. That's still ongoing, while the COVID virus still rages on there. And similarly, in the UK, we see the virus, COVID-19, still having a big impact. They're under lockdown until March, and the vaccines are being rolled out, and we've seen a bit of to and fro between the EU and the UK as to the EU holding back on vaccines potentially, and eventually they came to a conclusion about that. We also are still seeing the repercussions of Brexit flow through onto the market. Things are getting a little bit more certain now, but that is still in play. And overall, the ECB, the European Central Bank, and big players there are looking to, as far as the euro is concerned, to try and keep the euro down. That is actually a policy that they're trying to keep the value of the euro down. So that, of course, influences the markets also. Now, in America, they're still trying to also get the stimulus package out, and there's been a delay with that. And some analysts are saying that we could have to wait until perhaps March before that happens. Of course, once that does happen and there's this huge stimulus going into the markets, then or into people's households, basically, then there's more liquidity. And that bodes well for investments like gold and so on. But for the moment, they're all basically on hold. The liquidity issue is still on hold for a bit because you're waiting to see when it in fact gets passed and actually paid out. And so that is coming up over the course of the next few weeks. So very interesting to see. Now, just on the hedge funds, I just want to mention also that there's a big gathering of hedge funds taking place in the States, all the corporate directors, etc., on the 2nd of February. And many of them are also interested in looking at how to integrate cryptocurrencies into their portfolio. So that's also a very interesting phenomenon that's going to, or event that's going to be taking place during the course of this week. And I'll get into all of that now. But we here are technical analysts, and we are going to look at the charts and see where things are heading. And then I'm going to discuss a little bit more about the crypto side. So let's just first have a look here. And I'm going to start off with the Euro USD. I'm on the daily chart. And you can see here I have a channel formation and another channel formation where price has been moving downwards over the last few weeks and has just broken above this channel now. Indicators, as per this particular indicators that I've got on screen at the moment, are telling me that overall the sentiment currently is bearish, and in fact it's pretty much been kept in a range for the last few days, and I expect that that'll be the case going forward. at least for the next couple of weeks. So it's going to be range bound, and let's just see where we're at the moment. So let me just move this across. All right, so we're looking at price being about 1.213 at the moment, and being bearish, I expect that it will go down to at least 1.206 over the course of the next few days before rebounding and heading up to current levels again. It's pretty much neutral, but there is momentum to the downside, at least for the next couple of days. So I'd be looking out for mainly sell trades on the lower time frames on the Euro USD over the next few days. Now, if we had to move over to the pound, we can see that the pound has been following an upward movement between this channel and is still on the way up. It's well past its previous high set in December of 2019 at around the 1.34 level, or 1.35, sorry, level, and currently price is around the 1.37 level. Now, I do expect that it will continue upwards, slowly upwards. I'm bullish still on the pound, and I could expect that it would head towards the 1.39 level, psychological level there over the next few days before finding resistance. So I'm bullish on the pound, and I am going to be looking out for buy trades on the lower time frames as far as the pound's concerned. It's slow moving, and I'm getting mixed signals here as to whether it's bullish or bearish on one of the indicators here, but the other is telling me that we're looking bullish, and so are my MAs here. And just by looking at the price action, I can see that that is the case also. So overall bullish there on the pound. When I head over to the Aussie, you can see that price had followed a channel before and is now following another. It's in fact inside of a flag formation at the moment, and at the bottom end of the flag channel there, and just touching it there, and it's at a level 0.76 at the moment. Now, I do expect that it's going to rebound off that level after today's RBA announcement and head back up towards the upper band here, and we can see that price there would be around 0.77, and that's where I'm expecting it to head over the next day or so. So I'm looking bullish for the moment on the Aussie. I do though expect that it will follow a fairly neutral range-bound pattern after that, and will probably range between its current price, 0.76, and 0.77. Should it break through 0.77, then the next resistance level would be at 0.78. And should it break below, there's an unexpected announcement coming out of the RBA, then I would expect that it would retrace down to 0.75, perhaps even around the 0.745 level after that. So for the moment, just waiting on the announcement, but expecting bullish trade there over the next day or so. And on the lower time frames, I'm looking out for the bullish trades there, the buy trades. So let's head on to gold. Now, if you've been following me last week, I set out this flag type formation here, and price had been ranging in between this this channel here, and it touched the bottom trend line here, or the pole, and has been moving consistently upwards from there. Now, I'm neutral on gold at the moment, mainly because I'm adopting a more wait-and-see approach. Currently, signals are telling me that price is bullish at the moment. The market is bullish on the higher 4-hour daily time frame. So I do expect that it will drop, and that it will drop to around the 1.82 level, and possibly rebound after that back to current levels at about 1,860 or $70. So I'm expecting it to be range bound between those two levels there. Should it break below this level at 1.8, then we could expect it to retrace down to 1,766 or $60 around there. And should it increase in value from here, I could expect that it would head up towards the 1.9 level. But currently, neutral on this at the moment. I think we're going to see range bound for the best part. So on the lower time frames, I'll be looking out for some short entries and some long entries, keeping my stop losses quite tight and my targets quite tight also on that. Right, so what's happening in the world of cryptos? And let me move this out here. Well, we can see that Bitcoin has retraced quite a bit since our last look. As I said last week, I was looking bearish on the Bitcoin for at least a week or so. And currently the price at the time of making this is $33,784 a Bitcoin. And it's increased in the last 24 hours by just a small percentage, 0.16%. But we've seen some other coins, XRP, rise by as much as 38%, and Dogecoin also at 42%. And there's been a lot of talk also about new communities being formed on Reddit and so on, akin to the ones I was discussing earlier, where traders are talking about possibly doing a run on some of these coins. Not necessarily Bitcoin, but a few of the others, and we'll wait and see how that plays out. But I'd like to always remind you that with Bitcoin especially, there are what are known as whales, these big market movers in the markets. And 95% of Bitcoin is actually controlled by 2% of traders or whales. Should they decide either way to move into Bitcoin or move out of it, that does affect the price quite significantly. And over the last few weeks, we've had people like Elon Musk say that he's very interested in Bitcoin. He tweeted out a tweet about Bitcoin, and we saw price rise. That basically has faded now. We've seen price come back to 33. It's still bullish overall. And I expect that over the next few days, as I mentioned, there's a symposium, a conference happening on the 2nd of February, where a lot of hedge fund people or corporates and so on are looking to get together to see how they can incorporate more cryptocurrencies into their portfolio. And I do see that there's going to be more of this happening in the future. And that bodes well for cryptocurrencies, at least for the next few months. So over the next few days, I'm going to be bullish on Bitcoin, and I'm going to be looking at key psychological levels here. $34,000 level. Once it moves higher than that, one could then expect to go towards the $35,000 level. And that's where I'm going to restrict my prediction for this week to those two levels. Should it break below the 33 level, then $33,000 level, then we could see it going down even further towards the 32,000 level. Now, it's very range bound at the moment. There's no real big movements today as yet. And I think there's a lot of consolidation going on, but I do expect some moves upwards over the next few days. So do keep a lookout for that as you go along. So just a recap then from what I have mentioned. I'm neutral on gold for the moment. I do see it being range bound for the next few days at least. With the euro, similarly neutral. Basically looking out for bearish trades overall, but I do expect that it will remain range bound. I am bullish on Bitcoin for the next few days. I do think it's going to breach the 34,000 level, and that's where I'm aiming for now. And after that, $35,000 would be the next target. For the pound, I'm looking bullish still. I don't expect any big changes there, any great volatility, although we will be keeping out for the high impact news events, as I mentioned earlier, later in the week. And I'm bullish on the Australian dollar for the next day or so, waiting for the RBA announcement to come out. Right, so thank you guys for watching. I hope this has been of use to you, and I look forward to speaking to you again in my next videos. Please do remember, every Monday I'm going to be releasing these forecasts, and I'll do them at the same time each week so that you have some insight into what to expect in the week ahead. Thank you guys. Have a great trading week.